Aloha and welcome to Java. Thank you kindly for joining me. It's Friday, July 5th, 2024. We've got a lot to talk about today. Day after the holiday, I hope everybody had a wonderful time. So let's go right into the markets, what we're seeing today. We've got the MMRI, our favorite risk indicator, has pulled back a bit, 283, still high territory. However, it's pulled back quite a bit. Now, this is on the relative strength of the dollar and the 10-year yield, both pulling back significantly. This is giving stocks room to run. And as you can see from the fear greed index, headed more into the greed territory where people are buying more stocks. And there's a few factors going on with this. So let's talk about cryptocurrency for a moment. Is dropping significantly, and I'll talk about why. Mostly for the markets, we are watching job growth today. That's the numbers that we're getting. US jobs report is set to show substantial slowdown in hiring. We've been speaking about this. We've got companies going out of business, and so they have to let their employees go. So the current sentiment is that unemployment, the numbers, bad numbers on this, more people unemployed is good for the market. So if the unemployment comes in high, stocks will go up. So today, we've also got low volume because generally after a day after a holiday, if it's on a Thursday, traders tend to take off Fridays for a long weekend. That leads to low volatility plus lazier trades, and that means the volatility will be increased. So low volume plus the lazy trades equals high volatility. If I said low volatility, pardon me, it's going to be high volatility. So caution in your trades with that. So looking at the stocks at the current moment, they are green. We've got a lot of money flowing into these because they're expecting the jobs report to be terrible. And with that, the rate cut bet is on. We've also got basically elections over in the UK having some effect here, and we've got the futures also showing green for stocks. So positive for the markets at this moment. We've got the calendar on Friday. As I said, we're looking for the non-farm payrolls prior to market open as well as unemployment rate. Now, they're looking toward a 4% unemployment rate. It's a skewed report. We all know that. I expect it to be higher. However, we'll see what they come out with as far as numbers. Now, we've got Fed Williams spoke this prior to the market in the morning, if you will, depending on where you are, saying the Fed still has some work to bring the inflation down to the 2% goal. That means basically a little bit hawkish, but market is not really looking at that or listening to him. So these were prepared comments, of course. We've got treasuries snapping a losing streak because they think that the economy is slowing. So again, these are all basically initial indicators watching for this. But we're going to have very interesting day trading, as I said. So what do we look forward to? Well, we can either look back historically as to how the market reacts to some of these things, or forward in markets that are moving ahead of ours. And so one that we can watch, in my opinion, is the Swiss. So we've got Swiss inflation unexpectedly slowing as goods cost decline. So they've got basically that's what deflation is. It shows that the costs are declining as their currency gains a bit of strength. So they are basically a little bit ahead of us. We're looking at a basically deflationary phase coming ahead of us, I believe. With this, what are some of the indicators that I'm looking at? We've got businesses showing the largest contraction since the pandemic, and these were with the ISM numbers that we got. We've got, looking across the pond, a few things going on with Germany, and I'm going to speak about them in a little bit, but their industrial output unexpectedly dropped. So Germany, as I said, in a bit of trouble with their GDP, the jobs numbers, and their industrial output going down as well. So I want to speak another bit about the divergence, what's happening with this economy. We've got Saks Fifth Avenue and Neiman Marcus merging in a $2.65 billion deal. Amazon is taking a larger stake. Now, this is basically luxury, higher end market. Amazon is taking this on because basically they are losing money at the moment and they're losing retail space. So there is a dichotomy, but even the higher end is now beginning to lose a bit of business. So we've got a new law here that I want to speak about for a moment. It's a break from the market, sort of. Florida, the governor there, DeSantis, is signing into law new anti-ESG, basically a fight with federal bank regulators. And what this law is basically targeted to, it says that federally chartered banks could go into a legal battle over limits of state powers. And the reason is it gives the right to investigate. State regulators are allowed to investigate federally backed financial institutions, why they cancel accounts or why they reject a loan application. So now all of these federally controlled loans and banks, the ability to have a state look into them or question them is basically a new step. And the feds don't like it. They don't like being held to account. Cryptocurrencies, want to go into this a little bit more. So the big fears, we've got Bitcoin dropping, which is dragging down the rest of the entire industry. What is this all about? They're afraid up to 99% of Mt. Gox's Bitcoin could be sold. We've also got the German government transferring their holdings, $172 million, multiple locations to sell. On the other hand, we've got Justin's son, came out now. He owns Troncoin, the starter of Troncoin, rather. He also owns it. And large in the space, offering to buy the German government's $2.3 billion stack to minimize market impact. So now, sounds like he's doing something wonderful, but he's buying in at the bottom, basically doing offering a back-end deal to the German government because people still, those that are in the industry still want to acquire this. The ETF is in solid form, but this basically defines the difference between the two. Actually owning Bitcoin, the asset, hold it off chain, off exchange. Hardware wallets is what I recommend. But this is the incoming buying opportunity. If you've been holding back for the prices, this is when it's difficult to buy. This is when it is accumulation area. In my opinion, you can do what you want. This is not financial advice. However, I'm watching this. Right now, it's a falling knife, could go down to 52,000, possibly lower. We will want to watch it set its level from there. It could recover very rapidly. So watching this German sell-off as well as the quote-unquote Mt. Gox. But if you think Bitcoin is going to zero after BlackRock has purchased massive amounts, we've got other corporations that just purchased massive amounts, and we've still got the United States government, even though they're saying they're selling some on the front end, they are still holding on the back end. They're trying to shake out the weak hands, as we call them. So I am not selling mine and looking to see where these levels set. So at any rate, if you have any questions, comments about this, think I'm completely crazy, completely wrong, feel free to tell me in the comments. So we've got crypto startup launching tokenized US Treasury bonds on Bitcoin layer 2s. This story is really under the radar, and I think it's going to be huge because we've got these Treasury bonds, as you know, are the larger part of the market, is akin to basically shoving the market aside. So keeping an eye on these, I think they're huge. We are watching massive manipulation at its best. And if you can tell me an asset out there that is not manipulated, please tell me in the comments, because I tend to think it does not exist. Okay, moving forward, we've got some other stories in here. The US State Department is moving off of the markets directly, however, they are affected by this. Ukraine to be offered steps to NATO membership. Right after this, we've got Ukraine too corrupt to join NATO. So these are little older stories, but the reason I'm bringing this up is, first off, because these political wars and what is going on right now move the markets, because they're going to be the cover-up. We've got a lot going on with what's going on in the elections right now. Just had major overturn in UK elections, of Sunak stepping down, and these are used as a cover many, many times. It's also how mainstream media, the propaganda, is turned on a dime to say the exact opposite, and it's just used for the purpose. You can't believe everything you read. So we've got Biden versus Trump. This whole thing, okay, case in point, new poll shows the president still very much in the race despite debate fiasco. Anybody that thinks this guy is going to last through a full election and another term is really got their head either in the stars or someplace else. It's not going to happen. So moving forward again, we've got Iran and Russia. The universities agreeing on joint work for de-dollarization. These are their, basically they're putting everything forward to work on how this could move forward. We've got Turkey also ending speculation, ruling out mid-year minimum wage hike. Well, that's not really the story. What's really the story with Turkey is they are bridged, not just physically, I've spoken about this before, but also financially. And as far as with the war, they are the one country that is NATO state, and they have also just applied for BRICS. So we've got to keep an eye on them. In my mind, they're a major player coming forward that is just not being spoken about in this mainstream media that is playing you for a fool and putting out these posing stories as they would like. Another thing I would like to keep an eye out for is, in general, when we've got this particular turmoil, what's going on with the current presidency has to agree to step down in order to have another candidate run. Typically, if things get too volatile in that sector, war heats up because it's a good distraction. With this, I want to wish you all a wonderful day, green trading day, excellent weekend if you want. If you want to stay ahead with things currently, either on X, follow me, or join our Twitter, our Discord group, wonderful group, and I will leave a link to that in the description as well. So thank you all kindly until I see you again.